Good afternoon, everyone. I hope you've had a wonderful weekend and a great start to your trading week. In today's video, I'll be showing you different examples of our Volatility Box fade setup. I shared this video not too long ago, which breaks down the two different rules or checkpoints that we have as part of our Volatility Box fade setup. This is where when, say, price action is falling, we're looking to identify those levels where we think price is likely to build a base and then reverse from this point and get an early entry at a place while it's building the base before that reversal actually takes place. If you haven't seen this video, I'd recommend watching it before watching this video, which goes through examples compared to this video, which breaks that process down step by step, much slower. Now, starting off here, there's really four different markets we'll look at. The four markets include our four indices, so the S&P Futures, the Nasdaq Futures, which is this chart right here, then we have the DOW Futures, and then finally we have the Russell Futures for those of you that trade the small caps. There's two key takeaways I'm looking to drive home in today's video. The first is the power of really nice stretch targets, T2s if you will, and in today's case our T2s for our fade setup really came to bat for us. They gave us some nice winners, especially inside of the Nasdaq, the Dow, and even the Russell, so we'll go through each of those, and that's one key takeaway that I'd like to drive home. The power of being patient, sitting on your hands, just letting the stop or the second target work its magic, and the power of bracket orders, and how in today's case you were rewarded really nicely for your patience. Now the second takeaway, which is a negative takeaway or a learning lesson, is around the idea of forced trades, and in today's case this happened inside of the S&P along with our second trade inside of the Dow, where we took an entry towards the close. This was around that 12:30 Pacific mark, where we were looking for price to reverse after that end of day rally, and that simply did not work out. Looking back with, of course, 2020 hindsight, that felt like forcing a trade after having a really nice day, trying to ride those highs, compared to recognizing the fact that we're now at the tail of the day and there's probably just not enough time for follow through, and that's a better trade to just sit back and observe, similar to our edge of hour trades, compared to actually having put capital at risk. So those are the two takeaways to drive home. Now let's get started first with the Nasdaq Futures chart here. Now for the Nasdaq Futures, the first trade setup that we had was inside of that 7 to 8 a.m. Pacific hour, and that was when price action hit our first checkpoint right here, when price breaches our sign entry line. After that, we're looking for the edge signal for our second checkpoint, and that takes place right here once we have the red arrow. Once that happens, our trade setup rules are met. We're looking for an entry at the sign entry line, which we get in this green candle right here with the retest, and we get one more edge signal as well. Our stop inside of this Nasdaq short is outside of our Volatility Box clouds, and that's a bare minimum risk of 55 points. We're looking for the same 55 points for our first target, which is hit in this red candle right here. So this red candle is where we hit T1. After we hit that T1, our stop is moved from outside of the clouds, so from that 55 point risk to a break-even stop, where at this point we have $0 of capital at risk. Our second target is this gray target line, which is hidden behind this cyan line right here, and that's our second target. So it's what happens first. Does price hit our cyan entry line, so reversing back to our entry, or does price continue to go in that direction, falling to that second target line? And in today's case, say in the Nasdaq right here, price continued to keep falling to our second target line. You can see that right here. The Nasdaq falls, reverses, small bear flag. Then we have our new low right here in this overall trend. And that's where we hit our second target. Now to give you an idea of what that second target looks like inside of the Nasdaq, that was about 160 points with 0 points at risk. So inside of that Nasdaq, that second contract is really what I think made for a majority of the profits, not just for this trade, but for the overall day. The first contract was plus 55, but that second contract was the plus 160, which is where the bulk of today's gains came in. Now that was the one trade setup inside of the Nasdaq. Let me now move on next to the Dow so I can walk through the two setups we had inside of the Dow. Now the first setup inside of the Dow was similar to the first setup that we talked about just right now inside of the Nasdaq, where we had a breach in that 7 to 8 a.m. Pacific hour with this green candle right here. That's checkpoint 1. Checkpoint 2 is this red edge signal arrow before we go outside of the clouds. In the case of the Dow, you had an opportunity to enter at the clouds as well, so really cutting your risk from the sign entry line in half. If you did not get that entry, if you weren't quick enough to get that entry, then your risk on this trade was 100 points from the sign line to the outer edge of the clouds. And we were looking for that same 100 points one more time, which was hit in this red candle. Once we hit that first target in this red candle, so this is T1, our stop is moved from outside of the clouds to break even. So at this point, you have $0 at risk. Our second target is at this gray target line, T2, which in the case of the Dow, that second target was good for 165 points. Cyan line to the gray target line, 165 to 170 points depending on where you entered or got out as well, along with if you were able to cut your risk in half. So again, inside of the Dow, another nice winner, another nice T2. In this case, the T2 was an extra 65 points, so not as crazy as something like the Nasdaq, but still a really nice addition with a $0 stop. Now, inside of the Dow, we had an additional trade as well, so let me keep moving forward here. So after price action chopped around, we had another breach. This hit T1 without giving us an entry. Keep moving forward. We had a breach towards the edge of that 9 to 10 a.m. Pacific hour. This was the edge of hour. We broke outside of our doomsday aggressive and our conservative, and then this took us into our doomsday conservative models. And then finally, that second setup was into the close, where price action breaches our sign entry line. So this is checkpoint 1 with this candle right here. This is 1. Checkpoint 2 is the edge signal right there. We have an opportunity to enter at the sign line or better. We get the entry. We even get a little bit of a flush move down lower, but we were looking for about 115-ish points. We got only 108, so we fell short of our target by about 7 points before price reversed pretty dramatically, and we never really saw those same lows again. And into the close, this was about a 30-point loss per contract. So this ended up being a loser if you did not want to have this overnight risk, and we haven't had any kind of gap up with that 3 p.m. open yet. So this trade is still active if you are still in it. Now the next trade that we have is inside of the Russell. So let's move on to the Russell next, and I'll come back. Very similar to the Nasdaq and the Dow. Towards that beginning of the hour, the 7 to 8 a.m. Pacific, we had the breach. So step 1 with this green candle, checkpoint 2 with our edge signal confirmations. In the case of the Russell, you did have a good deal of heat as well. We almost went outside of the clouds inside of the Russell. So something to point out there, the Russell was not a stress-free trade, but for those of you that are options traders, inside of both the Russell for IWM options, this retest, along with inside of the Nasdaq as well with that retest, you had really nice premium opportunities where with the retest, your options this time were cheaper than they were this time around. So that's something to keep in mind for those of you that trade QQQ, IWM, even SPY options. Those were some nice tricks to keep in mind when you do get some of these nicer retests where you make almost a slightly higher high or a slightly lower low before price then continues going in that reversal direction. So now inside of the Russell here, our risk was 5.1 points from that cyan line to the outer edge of the clouds, 5.1 depending on what you gave it. And very similar to all of these other trades, you hit that same T1, then you moved your stop from outside of the clouds to break even, and price continued flushing down lower, hitting your T2 as well. And inside of the Russell, that T2 was about 17 points from the cyan line. So that second contract inside of the Russell, again, working its magic, and then the volatility picks up, where again, inside of the Russell, we end up going to the doomsday conservative models, and that only breaches towards the edge of the hour. Now, speaking of the edge of that hour, we'll move on to our final trade, which was in the S&P Futures. First off, the S&P Futures in that same 7 to 8 a.m. Pacific hour didn't give us that same sort of entry. So using the doomsday aggressive models, we ended up going outside of the clouds first. That then took us to our conservative models, broke outside of that as well. That then took us to our doomsday conservative models, so no entry early on in the S&P. And the only entry that came, which really looked to me initially almost like a double top sort of idea here, was towards the end of the day with the markets closing, but still towards that 30 mark in that 12 to 1 p.m. Pacific, where price action breaches the cyan entry line right here. We then got checkpoint 2 with the edge signal confirmation, stop again outside of the clouds. Our T1 in the case of the S&P futures, what we were looking for was about 17 points. We did not get to the 17 points. We fell about 0.75 points short before price reversed. So very similar to the Dow, fell just a little bit short before price reverses and then goes outside of the clouds as well inside of the S&P here with this wick right here, hitting that 17-point stop before we hit the 17-point target. So the S&P was a loser, and a loser by just a wick, but I think there was a bigger lesson here, which was the idea of trying to take a trade when you have really just 30 minutes left into the close, assuming you don't want to hold overnight into that 3 p.m. open. Well, this was simply just a bad idea, really chasing greed. And even though we did get that follow through and sticking to the plan there, being disciplined, all of that good stuff was in play, that simply was not enough, and we did still see price reverse hitting the stop. Alright, so I hope today's video was a good example of both winners and losers, focusing in again on the two takeaways of T2s and the power of T2s. We saw the second target being hit inside of the Dow, the Nasdaq, which had that really nice T2, and the Russell as well. And then we had the second takeaway of what that final hour trade and maybe ignoring it and what that may have been in terms of a forced trade looks like, in terms of trying to chase after a really nice day, trying to add to those winners. Maybe that was just not such a good idea in retrospect, and setting out, especially when you had only 30 minutes left into the close, was a better idea than trying to be a bit more aggressive there. Alright, hope you found this video useful. Take care everyone, good luck trading, and we'll see you in the next update.